So in this episode, I'm going to share with you the bear market strategies that I've been trading during this most recent drawdown. Now, listen, this is part of trading. There's ups and there's downs. And as a trader, you have to be able to pivot and adapt to the market you're in. You can't just stubbornly trade the way you love trading if the market is not supporting that. So if you're a trader who's kind of hitting against a wall, you're running into a wall, it may be because you're trying to trade a strategy the market's not supporting. And that's very common when you have downturns in the market. Although it can also be common if you have a swing back up in the market and you developed a strategy specifically for trading downturns. So you have to be able to adapt. So in this episode, I'm going to share with you the bear market strategy that I'm trading right now. This is the best that I've ever done trading during a bear market. And it's not just because of the setups that I'm taking or, the particular stocks that we're trading. More than anything, it's because I've been able to adopt the discipline to be patient. Because this is one of the challenges, and I had to learn it the hard way. In a bear market, you've got a headwind. You will not see the same level of parabolic momentum, these crazy extreme moves that you see during a bull market. So during a bear market, you have to set lower expectations. You have to be content with hitting smaller base hits. And if you're not disciplined enough to be able to do that, you're going to find yourself spinning your wheels. 2 steps forward, 2 steps back, 2 steps forward, 5 steps back. And that's not a way to make money. So the traders right now who get through the bear market, or those who are learning, perhaps you, those who are learning to trade during a bear market, if you can succeed during a bear market, you are setting a really solid foundation for the future. Because the fact is, the only traders who make it through bear markets are ones that have discipline. And that discipline will allow you to thrive when the market starts to heat up. So I hope that this inspires you. I hope it motivates you to continue studying. This is a class that I taught live about a month ago, and it was really popular. Everyone loved it. I got great feedback from it. So I wanted to premiere it here on YouTube for you guys. So we're going to do something special during this premiere. For every thumbs up we get, I'm going to donate $1 to charity. For every share we get, I'm going to donate $2 to charity during this live premiere. So please hit that thumbs up, hit the share, and I'm doing something extra special for you guys. There's a link right down below you can check out now or anytime during the episode, a 2-week trial over at Warrior Trading. 2 weeks to trade side by side with me. So check out that link for the 2-week trial. You're going to have access to the chat room, the ultra low latency broadcast, ad-free, real-time market commentary. You'll have access to the scanners that I use, the news API, and you'll get a sense of the way I trade in real time. You'll get a sense of whether or not you like the way I trade, you like the strategy, you like the community, and you like the tools. So give it a shot. I think you'll really enjoy it. There'll be a link right down below to check out the 2-week trial. And let's go ahead and jump in to bear market strategies. Let's get into it.
Cool. Okay. Well, why don't we go ahead and jump right in. This workshop is for those of you guys trying to figure out how the heck to trade through a bear market. Day trading in a bear market. Listen, if you're going to be a day trader and you want to be at this for the long haul, sooner or later, you're going to have to trade through a bear market. So if you're watching this right now, of course, live, it's because we're in a bear market. If you're watching this on the replay, maybe it's because we've entered another bear market or we're still in this bear market. I will try to record this study session as long as my internet doesn't break in the middle of this stream. The recording should be fine, and I'll be able to give that to you guys. So thank you guys who are watching on the replay. Everything I'm going to talk about today is still just as valid as it was the day we had this session. For the most part, the strategies I've been trading are unchanged over the last 10 years, with the exception of, a little bit of adapting to current market. But the strategies really are pretty much the same. So, and this is especially for those of you guys that wake up every day pumped, excited, ready to have an awesome day of trading, and then fall flat on your face as you get chopped up in another bear market. You guys, you are my people. This is you right here. Every single one of you. I know this is you. You think you're going to come out hot, have a great day? Boom. On your face. Everyone here, you guys are the JV team. You're not even the JV team. You're not even second string. All right. We are the bottom of the barrel. We are all scraping the bottom of the market to try to do the best we can to make a little bit of money. And you'd think it wouldn't be so difficult, but Obviously, as we all know, and as we have all proven in our own accounts, this is some really hard stuff. So some of you guys are, you are real savages. You will just put yourself through the ringer, and you probably won't take any of the good advice I'm going to share with you today because you're just you're out to make it harder than it has to be. But there are a few of you here today who will apply what I am going to share with you, and this could be a real game changer for you. So really take it to heart. This is important. Learning how to trade through a bear market is a criteria for long-term success as a trader. And here's the thing. Being successful is about following rules and about having the discipline and the aptitude. I will give you the rules. I will give you the blueprint of how to trade. I can tell you right here today how to day trade. You have to bring the aptitude and you have to bring the discipline to follow the rules. And if you don't bring those, you're never going to be successful. All right. So I'm going to get out, give out as much as I can, but you've got to bring it also. All right. So let's go ahead. Let's get started. And by the way, you can call me coach. All right. School's in session. This class today is going to be, like I said, 90 minutes, maybe 2 hours long. I'm going to give you a chance to vote on the class that I'm going to teach today. But I also have a little spin on that because I have something that I'm definitely going to include, which isn't on the topics to vote for. I'm also going to give you guys a new member coupon code. Some of you guys are going to decide, hey, this is the right place for me. I want to keep learning from Russ. This was an awesome day, and let's keep it going. So I'm going to bring on 10 students to work with me over the next year. It's the beginning of a 90-day long program. So I'll give you guys a link where you can join. All right. So that will be first come, first serve. All right. So bringing on 10 traders today. Couple bonuses. Number one, I'm going to give you guys a free outline of my small account day trading strategy, and I'm going to give you a copy of my best-selling book titled How to Day Trade. Where's the copy? I always keep a copy on my desk, but well, I don't know where it went. Anyways, so here's the deal. The market's dropping, and I'm making money. I can't tell you how good it feels to be the guy who's making money while the market's dropping. And during this last bear market, I have traded better than I have ever traded before in a bear market. You want to know how I feel during a bear market when I make money? This is it. Oh, yeah. Oh, it feels good. Oh, my God. Another green day? What? Are you serious? Long-term investors losing money? Not me. Oh, yeah. Day trading in a bear market. Now, you might not think it can be done, but it can. I have a day where it was the biggest red day that we had ever seen in the market. And you know who was green? This guy right here, because I'm trading volatility. All right. So this is the power of day trading. This right here is a stock. It was up 80%. On this day, I was up $50,000. The stock goes from $6.50 up to $9. You will have events like this in bear markets. You will have events like this in bull markets. All right. This is not just a bull market type of thing. You see it in all markets. Now, one of the things that I want to share with you is the fact that I am actually a profitable trader. This is over $11 million in gross profit, nearly 20,000 trades, accuracy 69%. I mean, why am I sharing all this with you? What's the big deal? It's important that you know the person you're learning from is qualified. Here's a guy who made a video of how to gain 1 million views in just 3 days. He's got 7 views and the video was uploaded 2 years ago. All right, so I'm not going to spend all my time telling you how much money I've made, but I want you to know beyond a shadow of a doubt that my gains are real. And this is actually right here. This is my audited broker statement. Let's see. I'll go full camera view here. This is my audited broker statement showing a 1.6 million % return. When I began this account with $583, it was January 1st, 2017. The account has over 10 million in gross profit. All right. Now, it's important that you know the person you're learning from is qualified. I've got my broker statements on the website, and this is the audit right here showing you that those broker statements are the real deal. So I'm not saying that there's a guarantee that you'll make money. In fact, I'm going to explicitly tell you that my results are not typical and that there is no guarantee that you will make money, whether you learn from me or you trade on your own. All right? Trading is risky. And let me just throw up a little poll here. I'm gonna throw a little question at you guys. So I'm gonna ask you, is day trading risky? And the answer is yes or yes. Go ahead. You see if you can fill that out. This is the real deal, guys. I'm not going to tell you that trading is easy. I'm not going to tell you you're going to make a million bucks overnight. I'm not going to tell you you're going to be a millionaire. I will talk during this workshop about the success that I've had. And I will talk about the success that some of the traders that are part of the Warrior Pro community have had. I'm very proud of those who have been successful. In fact, one of the most recent student who's made over $1 million, who got $1 million badge, he did something really, really important in the way he approached trading that I'm going to share with you guys today, because every single one of you can take a lesson from some of the things that he did right. But listen, this is the real deal. Trading is hard. It is hard. I mean, it's not being a roofer in July, but it's, pressing buttons. That's easy. Like, I just press buttons. Making money trading is hard. All right. That's what's hard. So I don't want to discount the fact that it is difficult. I want to be very upfront with you and tell you that. So all the statistics tell us that most traders lose money. All right. So this class is for beginner and experienced traders alike. I'll cover the core concepts as part of setting a good foundation for you to understand how I approach trading in a bear market. And then we're going to talk about advanced strategy development. All right. My job is to teach you financial literacy and the language of financial markets. This is the tip of the iceberg. There's a lot to learn, but we're going to get started here today. There's no better place here than today to jump in. So why don't you guys tell me which of these chapters you want me to teach? I said I would teach one chapter from the Warrior Pro curriculum. So those not already familiar, and you can just call out the one that you want me to teach. The Warrior Pro curriculum is a 20-chapter curriculum. This is it right here. So this is chapter 8, momentum, day trading strategies, long setup, number 4, the micro pullback. That's slide 732. This goes all the way down to slide 1400 right now. And my thought was that I would probably, because of course we're catering and sort of focusing this study group on trading in a bear market, I want to make sure that I'm sort of approaching it from that perspective. So we're not going to talk. It doesn't seem like there's a lot of interest in setup 5 consecutive candles. So I'm probably going to leave that alone. Right now, it seems like there's a lot of interest in the ABCD pattern. And you know what I also want to do here is, and there's a good amount of interest in the bull flag. What I would like to do is I'm going to put up a poll to ask how long you guys have been trading. This is going to help me also get a sense of the traders that are in this study session today, and make sure that we're sort of catering it to the right audience. It seems like we've got an interesting split so far, sort of high on the more than a year and a little higher on the brand new, and not as many people kind of right in the middle, which is actually kind of interesting because it's sort of opposite approaches for teaching brand new beginners versus those who have been doing it for a while. So, okay, no worries. Okay, so that is helpful for me. All right, so and a lot of folks interested in Parabolic as well. Okay. All right, I know I have what I need. I'm going to do a little mix match here, but it's good. I think this is going to work. So before I jump into the lesson, I want to give you guys a little bit of, I'm not going to tell you my entire history, of my life, but I want to share with you a little bit of how I got to where I am right here today. It's the story of your coach. It's an inspiring story. So let me share it with you. My family has a fairly long history in the stock market. My great-grandfather, his name was Lincoln, and he actually was working on the floor of the stock exchange 1929 during the great crash. It's kind of a incredible story because he was on the floor. He was just getting started. He was brand new. and he lost. He, like everyone, was out of a job. That was it. He was out of a job. He lost the money that he was there. However it worked. I've heard this story through my aunts and uncles, and so he ended up going into the insurance business and pretty much being very, very risk adverse for the rest of his life. He was not interested in the stock market. When I was going through middle school, 1997, 98, 99, it was the dot-com bubble. And I was fortunate that the teacher in the middle school, it was a Montessori middle school, so not maybe a traditional middle school. So the way this worked, there was one teacher for the whole, you didn't go to different teachers. It was one teacher, and he was really into stock market. And so what he decided to do was he actually created a whole curriculum semester around paper trading. And so every single day, we would partner up. My partner was named Cooper, and he and I would partner up, and we would choose different stocks that we were going to be investing in. And we had a paper trade account. And he had, the teacher, Kevin, had all the stocks up on the board, and he would update the prices every single day. And at the end of that semester, we went down to the New York Stock Exchange as part of a celebration at the end of the semester. So I, in a way, started getting interested in trading at a very young age, middle school, which is, it's quite young. A few years later, in high school, my friend Ben, that's Ben, third one in right there, he made about $15,000 trading a penny stock. And so that summer, I opened my first Ameritrade account. And that was actually before they merged with TD Waterhouse. It was just Ameritrade at that time. And I have some of the old statements over here from when it was just originally an Ameritrade account. It doesn't really matter. Anyways, so I traded a little bit in high school. That was with real money, but I didn't really make money. My approach at that time was I bought some shares of ExxonMobil. I bought some shares of Pfizer. This was like 2001. I bought some shares of a couple stocks that I knew. I had about $1,000 to play with. And I didn't really make any money by the end of the summer. None of the stocks had really done anything. And I sold out of the positions for flat, ended up buying a 1990 Volvo 240 station wagon for $1,000. I ended up selling that car about 5 years later for, I think it was $1,500, which was a pretty good ROI when you think about it. It was a 50% improvement. So a very sturdy car. But in any case, was out of the market. This is my high school graduation, my mom and my dad. And at this point, finishing high school, getting ready to go off to college, I did not know what I wanted to do in college. I didn't even really want to go to college, but my mom was pushing me. She was like, Ross, you got to go to college. You got to go to college. And so I ended up going to college, and I did about 3 semesters of college before moving home. I moved home. My father was diagnosed stage 4 lung cancer, less than a year to live. He said he's already metastasized to his brain. And so I was 20 years old when he was diagnosed. And so I lived at home. I pumped gas at the Sunoco gas station. I drove Dad to chemo and radiation therapy. And I sort of changed my whole view of what all this was worth. My dad never got to really have a true retirement. He died at the age of 61. That was the same age his father died. So they both died at age 61. My grandfather died of a heart attack the day after Thanksgiving, and my father, of lung cancer at 61 years old. So neither of them really got to live a retirement. And it kind of made me think that, life doesn't always work out, even when you're not trying to do what you really want to do. So you might as well try to do what you actually love to do, because if there's no guarantee it's going to work out, might as well at least go for the shot that it could work. So for a little while, I lived down in New York City, and I was pursuing architecture and design. I did finish my 4-year degree, and I was sort of falling into the rat race. And I thought that maybe, this was the right approach. And this was 2008, 2009. And of course, we had the recession, right? So I'm coming out of college at the beginning of the recession, which is the worst time to be coming out of college. No one was hiring. People with master's degrees were applying for unpaid internships. So I ended up moving back home to Vermont. And when my younger sister turned 21, I inherited $100,000 from my father. And so with that money, I thought to myself, I'm up in Vermont. There's really no good employment prospects, but maybe I can trade this account. And even if I only make, $1,000 a month, the cost of living at 23, 24, 25 years old up in Vermont, it's not that high. So at that time, I thought that I could maybe make a go of it. And I set up my trading station. I had a couple computers kind of pieced together, a couple different monitors pieced together. It wasn't fancy. It wasn't anything, high tech, but it was enough. It worked. Well, the problem was I really didn't know what the heck I was doing. I didn't have anyone to learn from. I was just trying to piece it together 100% myself. And what ended up happening was I hit rock bottom. So the $100,000 that he gave me over the course of 2 years, I spent it on cost of living. And what I didn't spend, I lost in trading profits, trading losses. So I lost it all the way down to having just my trading account, but I had accumulated over $30,000 in credit card debt. So that for me was rock bottom. And, every day I would sit down, I'd be excited to trade, and then I couldn't get out of my own way. It was like clockwork. And, it's like, this shouldn't feel this complicated. Let's see, where's this guy? I had a good one here. Where'd he go? Here it is. This is me every day. I can't even walk down the sidewalk. I mean, that's how I felt when it came to my trading. It was like every single day. And what ended up happening was I really started snowballing. I started to compound. The losses started to accelerate. This was me.
Ball boy is a mess. He is lost in space. He doesn't belong on the court. I'll tell you that much. He needs to be. God, there he goes again. Smash
again. Are you kidding me? Again. Boom. $3,000 loss. $4,000 loss. Again. Every single week.
There he goes again. Smashes his head.
Come on, guys.
This kid is all sorts of fucked
It
up.
doesn't. Oh, hot mic language. But this is what kept happening. I mean, it was like time and time again. And listen, it's important to get knocked down. It's important to be able to get back up. That is part of trading. But then, on the other hand, you've got to learn from your mistakes. And this was for me, I just couldn't get out of my own way. And so my rock bottom was having a $5,000 loss at the very beginning of a new month. And that put my account below PDT level. So I couldn't trade in it. So at this point, now my account's got like $19,000 in it. I can't day trade in it. I've got $30,000 of credit card debt. And I'm like, what am I going to do? And this is where desperation starts to set in. Now, for me, fortunately, because my account was locked out, I couldn't trade. And so what I ended up doing was I reviewed all of my metrics. And this was really important. And this is something that we'll talk about during this study group. You have to know your metrics. And so by reviewing my metrics, I actually discovered, and I'm so grateful for this, I discovered that there was a pattern in my trading. And this is what this data was telling me. As of right now, I've got almost 20,000 trades, 20,000 individual trades that you can review. I mean, it's so much data. You can analyze your metrics, your performance, and that's what I did. So you have to be willing to adapt to what the market is telling you. Patience isn't always the optimal way. Sometimes you do have to change directions. Being patient and just, sticking it out, that wasn't working for me. I was struggling. And here's the deal. Trading is hard to learn, but once you've got it, it doesn't feel hard in the same way as when you were getting started. It shouldn't feel like every single day is a struggle. That's the realization. It shouldn't be a struggle. This can be easier. I'm making it harder than it has to be. And so that's that hitting of rock bottom and then waking up and being like, wow, okay, let's take this back to the drawing board. Let's look at this a different way. And so what I discovered was that, in fact, my biggest winners all had something in common. My biggest winners were all on stocks that had high relative volume and were gapping up. That was really important. Now, if I could consolidate all my trading into that, This is what you get. And this is what happened. Of over $10 million in gross profit, all of it is on stocks up over 10%, which you can see right here. This is right in here, up over 10%. I'll turn on my my laser pointer. So up over 10% is right here. And this is stocks that have 5 times relative volume. So now we've got to sort of reverse engineer for you guys. How do you actually find those stocks? All right. How do you find those stocks so you can produce metrics like that? Now, obviously, there's no guarantee you'll produce metrics like that, but produce metrics where your winners are consolidated within one sort of type. So now I am so fortunate to be able to share the strategy that I trade every single day with traders all around the world. And it makes it more fun to learn to trade. You don't have to be doing this on your own. We've got over 2,200 testimonials over on Trustpilot, probably more by today. 92% giving us 5-star. So that doesn't happen by accident. That's because we've designed a really thorough, comprehensive program that 92% of the people that go through it say, this was awesome. All right. So I'm not going to, read every single one of those 2,000 testimonials, but I just want to reiterate that the person you're learning from right now is qualified to teach day trading. And that if you want to take it a step further and actually become a member of the Warrior Trading community, that you're coming to a place where 92% of the people in the community have said through Trustpilot that this has been an awesome fit for them. All right. So, the choice is yours. Do you want to make this harder than it has to be? And this is a good one. I'm going to show you that one in a second. I have another one. It's so good. I'll get it in a second. Do you want to make this harder than it has to be, or do you want to go the easy way? And this is just, to me, trying to reinvent the wheel or trying to learn from a strategy that someone is already trading every single day. So we're going to go ahead and jump in here. I've got the micro pullbacks right here. And what I was kind of thinking, I think I might do this a little bit differently and kind of mix in 2 sections. We've got half dollar, whole dollar entries. That one, I don't think I'm going to focus on that. We've got our ABCD pattern, which a number of you guys were interested in. I think what I'm going to do is I'm going to start with the first pullback on the bull flag, and then we can do a brief discussion of micro pullback, and then we can do a little bit of ABCD, because ABCD pattern is basically you have the first pullback, it then fails, and then it continues higher. That's sort of the way it works. So now let's go ahead and jump in here. Oh, wait 1 second. First, I want you to promise me that you won't throw hard-earned money into the market before you have first proven that you can make money by trading in a simulator. All right, so this was the one I was, so look at what happens to this guy's head. Now, I want you to think about this. This is what it's like when you trade with real money. When you trade with real money before, what do you think is going to happen to his head and his brain area? Whoa, close call. Okay, but let's not risk it, right? When you trade with real money and you don't know what you're doing, you are setting yourself up for failure. Seriously. You don't have to do it that way. So many people do it that way, and you don't have to do it that way. So I have to ask you guys a really simple question, which is, how bad do you want this? Because if you really want this, you will be patient and you will be disciplined. If you get desperate, you say, I need to make this money next week. I need to make this money by the end of the month. You will lose. I guarantee you. So if you really want this, be patient, be disciplined, pay your dues. And in a bear market, this is the best time to be learning, because if you can make money in a bear market, you are setting a really strong foundation for when the market heats up. And when the market does start to heat up, you are ready to put the pedal to the metal and scale into it. Now, if you start learning when the market's hot, you're missing out on that opportunity, because you're not going to be able to fully capitalize on it because you're new. So you are learning right now at the perfect time. Okay. So I want to talk about risk management. let's lay the foundation here for trading in a bear market by talking about risk management. Trading is risky. All right, we understand that, but let's think about how this works. So this is a table, as you can see right here, and it's comparing risk and reward. And so if you risk $1 to make $1, you have to be right 50% of the time to break even. All right, that's your break even point. Now, if you risk $1 to make $2, you actually only have to be right 33% of the time in order to break even. That means you can be wrong 70% of the time, 65% of the time, whatever, and you can still make money. That's incredible. That's because you understand statistics. Now, what a lot of beginner traders do, and you might be able to relate to this, is they hold losers too long and they sell winners too soon. If that is something you do, you hold your losers too long and you sell your winners too soon, I can guarantee you, you will have a negative profit-loss ratio. You win $1 on average, but you lose $3. And if that's the case, you would need to be right 75% of the time in order to be profitable. Now, if you look back at the metrics that I showed you earlier on the over 10 million in gross profit, you would notice my accuracy is 69%. 69%, that's great. That doesn't tell the whole story. You can have 69% accuracy and still lose money if you have a negative profit-loss ratio. Or you could be right 69% and make $10 million, right? So it's how do these numbers come together? And this is what being cognizant of risk management allows you to empower yourself to be successful and make money, even if you're not right 100% of the time. All right. So, and here you go. I have the slide here again. So 69% accuracy right there. And you can see my average winners and average losers are approximately the same. They're roughly the same. They could be a little bit closer, but they're pretty close. And Casey says, me too, I sell too quick. Listen, it's a fear-based habit. It's a behavior driven by fear. It's the fear of losing the small gain that causes you to cut it and sell it and take the profit. And inversely, when you're in a loser, you don't want to have a loss. And the only way that it maybe won't turn into a loss is if you hold it and then it goes back up. So you keep holding it, hoping it goes back up, because it's not really a loss until you press the sell button. There's always hope until you press the sell button, so you keep holding. The sort of our human emotions are not designed to trade the market, right? The market, humans have been around a lot longer than the stock market. We have to adapt our mind to trade the stock market successfully, because the way we are naturally wired will cause you to lose money. So this is about, it's not, and so Marwin says it's about controlling emotions. That's one way to put it. But on the other hand, I would say that it's difficult to control your emotions. You can't just not be angry. You can't just not be frustrated. You'll feel that. It's developing awareness that I'm feeling pissed off right now. That means this is a good time for me to walk away and stop trading. That's what it's about. That's the best you can do. You will still get emotions. I still get them. I still get angry. I still get excited. I still have all the emotions. But what I've gotten better at is learning to recognize their influence in the way I trade. That way I can cut off real quick and get out when I'm starting to feel myself getting what I call emotionally activated. All right. So I've kind of laid out profitability in terms of 3 core components, which I'll just share with you briefly here. The 3 core components are consistency, profit-loss ratio, and accuracy. Your profit-loss ratio, I just talked about, it's your average winners versus losers, and your accuracy is your percentage of success over, X number of trades, how many were winners. The third was consistency. Now, sometimes traders say, Ross, which one should I focus on? And so I'm going to take this as an opportunity to get up the whiteboard here. This is kind of, there's different ways to approach it, but this is what I would focus on. Focus on A quality, A++, AAA setups, the best setups. Focus on trading the very best setup. Goes up. And you know what happens when accuracy goes up? You have fewer losers. So you know what improves? Your profit-loss ratio, because your losses are smaller when they happen, because you're focusing on the right type of stocks. And you know what that then leads to? Consistency improves. Consistency goes up. So where do you need to start? Right here. And this is true whether you're in a bear market or a bull market. Focus on best quality setups. Now, That's a great question. Dennis says, which setups are best? Dennis, you are sending us right into the next section. I couldn't be more grateful. What a perfect transition. Can we get Dennis here every time I have a study group? I created a process for finding the right stocks each morning. So as I mentioned, the realization that I had years ago in my trading was that my profits were from stocks that were up 10%. Okay, so, well, up 10%, that's easy, right? So just have to look for a stock that's up 10%. Boom, done. Okay, well, it's more than that, though. It's a little bit more than that. It's up 10%, and then it has the potential to keep going up. So what else is it? All right, so in order for a stock to have the potential to go up 20 to 30%, at a minimum, right, there needs to be an imbalance between supply and demand. My biggest winners are almost always sharing similar supply-demand characteristics. All right, so this is an imbalance between supply and demand when a stock goes up more than 10%, and when you have 5 times relative volume, it's showing a very high level of demand. Okay, so this is the scanner system that I've actually, I mean, it's funny. You wouldn't think this would take years to figure out, but when you're doing trial and error, this slide right here took me years to discover. If someone had given me this on day one when I started day trading, I can't tell you how much it would have sped up my learning curve. So these are the tidbits that you guys should be writing down, because I wish I had known this stuff when I got started. So in order for a stock to go up 20, 30%, these are the indicators of a high supply-demand imbalance. All right, high demand, low supply. So number one, we need 5 times relative volume. All right, so let's switch over here. So I'll just take this one off. Well, I don't need to write it down. We've already got it right here. So, but let's kind of talk about how this works. Let's talk about why this works. So we're looking for a stock that has a potential to go up 20, 30%, right? Let's just think sort of outside the box on this. So a stock goes up 20, 30%. How does this happen? Why does this happen? Why would a stock go up 20, 30% in one day? Why would it go up 100% in one day? There's probably news, right? Okay, so some type of news event. Number 3, there's a news event moving the stock higher. We sometimes will call that a fundamental catalyst. There's a catalyst. Okay. The stock should have 5 times relative volume. Well, what would make a stock have 5 times relative volume? A stock is going to have 5 times relative volume if there's something really exciting happening with it today, which means it's got news and it's already up. It's already moving. So the way this is, and this is really, I mean, this gets into some really deep stuff that we're not going to have time to get into today, but for those of you that become Warrior Pro members, we'll talk about it in more detail. This gets into algo trading and being able to scalp algos. So what ends up happening is news comes out, news hits the PR, news hits the wire at 9 a.m. 9 a.m. news hits. Immediately, algo reads news and instantaneously initiates buy. They buy and they pull sell orders. So what does that do? All of a sudden, you have a level 2 like this. They start pulling the sell orders. They start hitting the bid. And now you've got an imbalance. The stock starts moving up fast. Now it starts hitting high-a-day Momo scanners. It starts hitting high-a-day Momo scanners as it's moving up. Boom, 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 boom. Now you have retail traders. They're jumping on. And this is now accelerating and moving faster. It starts with an algo spike, a squeeze, and then we jump on and ride that momentum. It comes back to the news. But here's the thing. It's not helpful. We have a news feed that we use, a proprietary news feed that puts news headlines in our room. But the fact is, news is coming out all the time. Okay, so just listening to news, you could listen to news all day long. In fact, we need to use these scanners because we need to see something moving up. So the scanners are the radar. So I have a development team that I hire. These are coding people. They developed this. They built this scanner for me. We subscribe to market data. Okay, so what we want to do is we want to get market data basically at the same time that those high frequency trading algorithms are getting their market data. So we all subscribe to market data, and there's this big competition about co-locating the servers. So you're getting market data at the same time as everyone else, right? There's even like having the same length of fiber connection. So everyone's getting the same sort of level playing field, but it's never really level. You guys know that it's not level, but we do everything we can as a retail trader to kind of get our edge. So we have a market data vendor, we get the market data, and then we process it in our own servers. And we are looking for stocks that are moving up quickly right now. And as a Warrior Pro All Access member, you guys have access to the same tool that I use. I've made it available to you guys. So, and that was one of the nice things, is being able to have a development team build this out for me and then share it with you. So we get this news, we get this stock squeezing up. We see it starting to move higher. And then immediately we see, okay, it's got a news headline. It's already up 10%. The stock is between 1 and 20, which is only important because those stocks can make bigger percentage moves. A $1 stock that goes to $5 is up 400 or 500%. A $50 stock that goes up to 55, it's up the same $5 a share, but it's only up 10%, right? So lower price moves in a percentage gainer sense faster, much more attractive for retail traders who are often trading with smaller accounts. And then we've got the supply side, less than 10 million shares available to trade. That's preferable. So when a company does an IPO, they sell a certain number of shares onto the market. Companies that sell fewer shares have a lower level of supply. So, you know, Tesla is a really big company, but they haven't sold nearly as many shares as a company like Bank of America. Some companies out there sell a lot more shares to raise money, and others sell fewer. So companies that sell fewer shares, when people want them, you know, boom, 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 it starts to move up more and more and more and more. There's just a limited level of demand. Now, at the end of the day, you still have the market cap equation, which is the number of shares and the price that it's trading at. And by the way, if I'm getting a little over your head, have faith. This is all stuff that, first of all, we cover in a lot more detail for traders that are part of the curriculum. And there's a lot to learn here. So I don't want you to get overwhelmed. Just soak it up today. And if this stuff is interesting to you and you're like, I want to keep learning, then keep learning. It's like learning a new language in a way. I mean, there's a lot here to learn. There's a lot to unpack. I try to make it pretty clear, but anyways, so, you know, the fact is, at this point for me, finding stocks to trade is no longer a struggle. And that's, I mean, that's really a big deal. So I find these stocks to trade every single day. So circling back to Dennis's question, how do you find, what is a quality setup? We're going to talk about the setups in just a second when we get into the actual curriculum from Warrior Pro. But in terms of the right type of stock to trade, and I have it on the back of this so we can refer back to it. We're looking for 10% at least, price between 2 and 20, 1 and 20, relative volume 5 and higher, news catalyst, float under 20 million, 10 million is preferable. Okay, so this is the general criteria. If a stock right now doesn't meet this, I'm probably not going to trade it. Okay, now it might meet like 3 of these, but I want to meet all of them, especially in a bear market, right? If we're focusing on, you know, AAA, A quality, A plus setups, they should have all of these. So if it has, you know, 4 of these, but the float is like 100 million shares, well, it's probably going to be a deal breaker. If it has everything, but it has no news, it's going to be hard to trust. I might still take a couple trades on it, but it's going to be hard to trust. And, you know, I probably shouldn't trade it at all. Okay, so if it's got all of this, but the price is $50 a share, that's going to be too risky. So it's got to have everything. And in a bull market, you might see a stock that has everything, and you might see 5 of them a day. In a bear market, you might see 5 of them a week. So the opportunities are still there, but they're a little fewer and further between. All right, so let's go ahead and jump into the class. Have I lost you guys? Are you guys still with me? Does it sound good? All right. This is some of you guys. This is where some of you guys are right now. You're like, oh my God. Done. I'm out. I know it's a lot. Listen, I know it's a lot. I know this is some heavy stuff. No pain, no gain, right? Okay. All right, let's keep going. Okay, so all right, so I'm going to back this out here. I'm going to put this up here. So I'll bring this back. I'll show this to you in a few minutes. All right, so now let's go over. So let's go full screen on the bull flag. So so what I want to do here is I'm going to kind of play this out for you for a second. So this is a bull flag pattern. So for those of you guys that are, again, like beginning of the learning curve, which was kind of a good number of you, we're using candlestick charts. All right. So the reason we're using candlestick charts is because a candlestick communicates 4 pieces of information: the open, the close, the high, and the low. So really super quick, candlestick 101. This is a candlestick right here. And we've got the open, the close. So that's the close. That's the open. That's the low. And that's the high. All right. Now, if it was a red candle, it opens at the top and closes at the bottom. Those are flipped, but these are still the high and the low. So we like candlesticks because they communicate market sentiment. Doesn't it make sense that a candle that looks like this communicates something different than a candle that looks like this, right? Clearly, those are sending a message. So this is pattern recognition. And this is what we can begin to do, is we recognize these patterns. And so in the context of a bull flag, what we have is a stock that has quickly moved higher. So these are our candlesticks moving up. Okay, now it starts to develop a pullback like this. And this is the important place to start watching it. We will find a stock doing this right here as it's going up on our scanners. The scanners are the radar that we use. So each one of these dots is the stock hitting the scanner. So we're going to pull up the stock. We're going to see, okay, this stock is moving higher right now. It's on our scanners. But I don't want to chase it. I got to wait for a pullback. And so this is the bull flag pullback right here. So we wait for a momentary pullback. Now, the interesting thing is this could be on a 10-second chart. This could be on a 1-minute chart. It could be on a 5-minute chart. You could trade on a 15-minute chart. You could even trade it on a daily chart if you wanted to. The pattern occurs in all time frames. So it's up to you which pattern or which time frame you prefer to trade on. I am primarily using 1-minute and 5-minute, but I am also applying this to a 10-second chart. So we've got our micro pullback. And during this time where it's pulling back, I'm going to be watching it closely. And my hand is going to be on what button? The buy button. So I'm ready to tap that buy button the second I see a candle break that price right there, that dotted line. The second this stock breaks over this level. And so what I'm going to have to be doing is I'm going to have to use my charts to be constantly checking what was the high of this candle? What was the high of this candle right here? What's the high of this candle here? Now, if this candle high is $3.10, then on my level 2 window, when I see 307 by 308, and then I'm seeing green prints at 308, I'm going to start thinking to myself, there's a good chance this is going to break through 310. I'm going to punch it. I'm going to hit the buy button. I'm going to step up to the plate on this. You have enough people that step up to the plate, enough people that press that buy button, and that becomes a self-fulfilling prophecy. And that's the reason chart patterns work so well on stocks that have high relative volume. It's because so many traders use them. Okay, and Dan, I don't exclude the wicks. I include the wicks. So I do include the wick. Now, the first candle to make a new high, I'm long there, let's say 310. And of course, the first target is a move back to the high. We break through the high right there. We continue higher. And then we wait for the next pullback. And then we do it again. And that's what I do on the bull flag, and I do it all day long. Now, I'm going to be most aggressive, and these are the waves that stocks are trading in. This seems simple, and this is fairly simple. Where do people make the mistake? They try to apply that pattern to the wrong type of stock. It works well when you trade the right type of stock. When you trade stocks that have high relative volume, you've got a lot of people watching this pullback. A lot of people watching means a lot of people pressing the buy button as it starts to dip back down. If you start to apply this to a stock that has a high level of high frequency trading like Bank of America or something like that, you are not going to see good resolution out of this pattern. It will not resolve correctly. There's no reason for it to resolve correctly. You have to trade the right type of stock. That's got to be first and foremost, right type of stock to trade. And then you apply these patterns to that setup. All right, so let's jump back onto the screen here. So you can do this this could be a 1 minute. So like my example here on the whiteboard, this could be a 10-second chart. And remember, if this was a 10-second chart, then the 1 minute chart probably looks like this. It might have a small topping tail, which was formed right there. The next candle on the 1 minute opens a little bit lower, and then it goes higher. And then there's another slight topping tail as it opens a little bit lower and then goes higher again. Okay, now we look for the same pattern except for on the 1 minute chart, right? So this is the zoomed in 10-second chart. Now we do the same thing on the 1 minute. And then we could do the same thing on the 5 minute. And Raj says, what's my risk? Stop at the low of the pullback. Stop at the low of the pullback. Stop at the low of the pullback. So when I'm trying to buy a dip, I'm trying to buy it down here off this level, but I don't want to just start buying it, like right here, because I don't know, it might pull back more. And I don't want to buy it right here because it might end up pulling back more. In fact, it might end up pulling back all the way down and if the chart's broken. Okay, so what I really want to do is I want to wait to press the buy button until I start seeing the green prints. When I start seeing those green prints on the level 2, that's usually what I'm going to look for, is that first indicator that the trend is starting to shift. So this is the bull flag pattern, and I'm gonna read this to you so you don't have to try to read it yourself. I'll put up my camera so it's a little bit more interesting to look at. All right, so the first candle to make a new high, the apex point of the bull flag or the pattern, that's the entry. Okay, so right here, this is the apex right there. It's the first candle to make a new high. That's the entry. Sometimes I will enter early to anticipate the breakout. As I said here, if the first entry, if the candle's at 310, but I'm seeing green prints at 308 and 39, that's an indicator. Go ahead and press the buy button. This is time and sales, and this is level 2. All right, so this is, again, a little bit more intricate, but important stuff to know. And if you're an active trader, you've probably already seen all this stuff. So if I'm entering early, what typically triggers that entry is a break through a psychological level. Perhaps we dipped below on this candle. We might have dipped down to 299 or 298, and then we popped back up over 3. So breaking below and then back above psychological levels, very important. So even if a stock is not quite yet at the first candle to make a new high, if it breaks below this critical level, so we're pulling back here, we're pulling back, and let's say this is $3. So we dip below 3, and then as it comes back up, there'll be green on the tape. So as it comes back up there, 299, 301, if it can reclaim the whole dollar psychological level, I'm going to punch that buy button at 301. 301, buy. And then the first candle to make a new high is still at 310. What am I going to do? I'm going to add more at 310. So now we've got this candle going up, going back up, going back up. And of course, the idea was on a bull flag, right? So this is a psychological level. And again, just, by the way, this is why it's so valuable to be trading in a community, because you're not trading on your own. While I'm trading, I am articulating this type of price action in real time. That's why you call me coach, right? You say, hey, coach, look. And I say, that's right. We're watching this stock. And that's right. My name's Coach. Don't forget it. So almost immediately upon entering, I want to see the price move up. If the price moves down immediately, my timing's wrong. Usually I'm pretty good with my timing because I'm tape reading. But sometimes the timing will be wrong. And if the timing's wrong, I usually cut it right away. So if I take a starter, then I add as it moves higher. Again, when I go red on a trade almost immediately, I often change my perspective to getting out break even, if possible, rather than it being a winner. I no longer kind of think, oh, this is going to work. Because if I get in and it immediately flushes, my timing is just wrong. Okay, so now let's talk about the target. All right, so first we've got the entry. The entry is the first candle to make a new high, right? But we sometimes will anticipate it with an early entry based on the tape and psychological levels that we're trading around. Okay, and some of this is stuff that an algo can't really do yet. Maybe eventually they will, but this is where we have an edge as retail traders, right? We're able to read these nuances, both in the speed of orders going through, the levels, the candles. This is a lot of stuff to try to program into an algo. And what we find is that stocks that have very high levels of relative volume are up more than 20, 30%. There's a lot of algos that when a stock is up that much, they just turn it off. And so there's this argument that high frequency trading algorithms are providing liquidity to the market. Yeah, until the market gets volatile and then they turn off. So when they turn off, a volatile market gets even more volatile because you don't have those algos creating the bids and offers that kind of just tighten it back down. But that's actually good for us because that's where we start to see these big moves. As day traders, we profit in a way from inefficiencies in the market. You know, if the market was perfectly efficient, a stock would just always be trading at the exact correct value price, and you wouldn't have these fluctuations. You wouldn't have these news spike. It would just, there'd be news and then immediately it would be at the next level. But it moves to these levels and then comes down off of them. So anyway, so the target is a retest of high a day. All right. Now, if the pullback is a bigger one, then we may start be getting into the mindset of an ABCD pattern. And we're going to talk about the ABCD pattern again in a second, but the ABCD pattern would be like it pops up here and then it dips down again, and then it starts to go. So it's like a double bull flag. And in a way, it can make this final breakout more powerful because during this sort of period of consolidation, more traders, and these are their eyes, they're like looking at it, they're like, ooh, this is exciting. And this, you know, he's kind of, this is like his face and stuff. He's like, ooh, this is interesting. And then he's like pressing the buy button. When you have really fast patterns, not as many traders will always see them. And then that's going to reduce the volume. So when you have a pattern that's very obvious and is more drawn out here, more eyes mean usually better follow through. Again, not always, but that's typically the case. So risk factors. So here's the thing. Stops are usually tight on this pattern. However, we do have a risk factor of false breakouts and double top rejections. So a double top rejection is when you come up to this level and then you reject off of it and just kind of like it sells really hard. Now, a number of things can trigger that, but initially, usually what it is, it starts with like a big sell order. So it comes up to this level and all of a sudden someone puts out a big sell order. And so it immediately kind of flashes down in that market order. And then people that got in for this micro pullback or 1 minute pullback start to bail. And then you get that panic sell. And if it breaks through the low of this last pullback, it's stopping people out and now it's breaking down. It may still end up working on a 5 minute or a 15-minute time frame, but whether or not you really want to hold it that long is sort of the question. So this is something that a lot of traders in this place, if you see that double top and it doesn't break through it, they're going to bail out. So that means buying at the very high can be a little bit risky, especially in a bear market. Buying on the pullback is going to be better. And so that's probably the biggest risk is a false breakout, either formed by the double top or just through it popping and then immediately reversing back down. But the stop loss is typically tight at the low of the last pullback. Now, this is all relative. If this is a $3 stock, this might only be a 15-cent stop. If it's a $30 stock, it could be $1.50 per share stop. But as you know, we would rather trade lower price stocks because it's easier to manage risk on, and usually we'll see more momentum on them anyways. So that's kind of my preference. Profit targets on this, I mean, generally speaking, 1-to-1 is minimum. I aim for 2-to-1. So if I'm going to risk 10 cents, I want to have the potential to make 20. The potential, the realistic potential. So if I'm looking at this setup and I'm thinking about getting in, the difference from this entry here to the high has to be at least 20 cents. That's a 10-cent stop. That's a 20-cent target. If that's not a bare minimum, I probably won't take the trade because I'll just say it's not worth it. Maybe it's a B quality setup. Maybe in a hot market, I would take a B quality setup, but in a cold market and a bear market, no. I'm going to be focused on high quality setups, which means during a bear market, I'm going to trade less frequently. But the trades that we have, I'll still be aggressive on them. And when they work, I'll do well. And so that's the biggest difference, is fewer trades, more disciplined during the bear market. And also in a strong market, I would be adding into these levels. I'd be adding up here. Oops, I'm adding up here. I would add up here, and I'll just add at highs. When I'm seeing green on the tape, I'll just keep adding into that squeeze. So I'm just like, I'm all in. In a bear market, I'm going to buy on the first entry here. I might, take a starter on this dip and then add into this breakout, but I'm not going to be as aggressive adding too high into the breakout because of that false breakout risk. So a little bit more conservative there, but even within a bear market, there may be individual days in that bear market where it actually does make sense to be more aggressive. A bear market is kind of a hot and cold market. You might have like 3 or 4 cold days, and then you have a really hot day. And so on that really hot day, yeah, you want to be aggressive. And then on the rest of the days, you just go easy. So, and you never know which day is going to be the hot day. That's the thing. So you show up every day and, you sit down and you just see what the opportunities are. All right. So, so these are a couple of examples of bull flags and flat tops. And what I'm going to do, I'm going to run you through a couple examples of this. And then let's see, do you guys want to look at the micro pullback next, or do you want to look at the ABCD pattern? We can kind of do either. The ABCD pattern is just the extended bull flag for a second leg. And then the micro pullback is like all of this condensed on like a very short time frame. I'll let you guys tell me what you think. All right, so bull flags and flat tops. So this right here on the screen share, this shows a nice example there of that sort of pullback and then the move higher, right? So pullback, move higher. So maybe we'll do ABCD into micro pullback, and then we'll cover a little bit of parabolic to finish it off. All right, so pops up, pulls back, and then rips. I mean, this is a perfect example of that first candle making a new high, right? I mean, how is that not a perfect example? You have the move up, the pullback, and then it goes higher. Time frame, that's a 5-minute chart. So you can trade this bull flag first pullback on a 5-minute. Now this is kind of interesting. This is a 5-minute chart on the left and a 1-minute on the right. And right here, this is a 1-minute bull flag, but it's kind of a false breakout. See how it's a little bit of a false breakout? Also notice this is sort of floating way, way, way up here. It's super extended. It comes back down to this level at the moving average, and then we set up first 5-minute candle to make a new high, and this thing goes from 360 all the way up to 450, 460, pulls back, and then that pullback, it actually got bought up pretty well, and the volume is increasing, right? So this is where we're starting to see it's a small cap stock, it's an energy stock, it's moving fast, traders are focused on it. You've got decent volume. Here's another one. Stock goes from $1.24 to $3, over 100%. This is a 5-minute chart. And so you can see early on a little bit of chop, this pop and pullback, pop up. It's a pullback right there, but it gets a little cleaner right here. That's a pretty clean pullback. This one's a pretty clean pullback. As they start to get more extended, as they start to get more volume, that's where we can start to see these really clean patterns. It just starts to become super obvious. This one, really nice. This is a more expensive stock at 26, goes up to 28, but very clean pullback. Pops up, first pullback right here. A very quick one, and it goes higher. It doesn't wait. It moves up, pulls back, and then goes higher. And that going higher and not waiting, that's why we do so many micro pullbacks, especially in a bear market, because when something starts to move, traders jump on it fast. They don't wait. They just jump on it fast because they don't want to miss the opportunity, and then off it goes. And the problem is if you're sitting there waiting for that 5-minute pullback, a lot of times we just don't get it. So in a bear market, it's funny, but you actually in some ways have to be faster because the opportunities are short-lived. So this one starts, it goes red, and then it pops up, and that right there on a 1-minute chart is like a micro pullback, and then it just rips from 22 all the way to $32 a share. But don't get caught chasing it because look at that red candle as it comes back down. right? So this is another one, sort of red to green move. Then it breaks over the VWAP, pulls back, pops higher, pulls back, inverted head and shoulders, dips down, pops up, pulls back, and goes higher. Not the cleanest, but not bad either. This is a nice one. Curls over VWAP, pulls back right there, 5-minute time frame, and breaks from 12 up to $18 a share. That's fantastic. That's a really nice move. Okay, so now let's talk for a second about, let's go into the ABCD pattern. So let's see, our ABCD pattern, where was it? So the ABCD pattern, I'm going to show you a couple examples of this. The ABCD pattern is basically, it's a bull flag, a first pullback that fails. So what ends up happening is we have that pullback right here. It pulls back, it makes a new high right there, and then it doesn't go through the high. So initially, it's a failed bull flag. It pops up, it doesn't go to the high, and it pulls back. But sometimes that's okay. And it actually can create this coiling, this really strong pattern that ends up breaking even stronger when it finally goes than if it had gone on this first setup. So this shows us a pullback, a breakout, pullback. It pops up right here. It pulls back. It does not break the low. So that's the important thing. Let's go to the whiteboard. So the important thing on this setup here for the ABCD pattern is that we're moving higher. Okay, we move higher like this. And then we have our first pullback right here. And then we pop up here, but we don't make new highs, right? And then we pull back just a little bit. And then we come up right here, and this is where we break through. So this is where we sort of have this like wedge formation. So the levels that are important on this pattern is that it cannot break the low of this pullback. If it breaks the low of that pullback, then what it's doing is it's stair-stepping down. And that's bearish. It has to hold this level. It can double bottom, but it can't break it. So it could double bottom right here. It could double bottom and then go higher. So it forms this kind of W pattern. And sometimes it even goes for another leg and then it breaks. I don't usually like to wait too long. If it's not strong enough to break on the first try, I mean, I'm kind of like already like, I don't know. This should have kind of gone on the first try, but let's give it a second. And then if it goes on the second try, that completes the ABCD pattern, good. If it doesn't go on that try, then I really am kind of like, this isn't strong enough. If it was really strong, it would have already gone. For some reason, it's just kind of being held back a little bit. So you can see this one here being held back a little bit. This is one, let's see. This one's a little bit probably harder to visualize as a beginner. I'll show you. Let's see. So this one is right in here. So it pulls back, it pops up, it dips down, but not below that low, and then it goes. And then the first pullback following the breakout provides an opportunity to buy that dip right there. This is another one right in here. Pullback, pop up, pullback, starts to come up, almost starts to form more of like a double top, pulls back, and then it goes on the third try. Sort of similar here, pulls back, pops up, pulls back, and then it goes. So it's really like an extended bull flag. This is a little bit cleaner. I mean, this one's pretty clean. It pops up, it pulls back, it pops up. And in this case here, this is really common when you get a big pullback. I mean, this went all the way to 9 and then drops below 8. So that's a big pullback. It then bounces back up, but it's just not really realistic that it's going to go all the way back through 9. So it bounces back up, but then not quite enough. It pulls back. And then here we start to get in this consolidation. And now it's like, okay, it's holding this level. If it breaks this level here, the next logical spot is a retest of the high. And then we're off to the races. So that one is actually a pretty nice ABCD pattern. This one's a little bit sloppier. It kind of pulls back and sells off below VWAP, rips back up, pulls back, and then it goes. So, I mean, really, it's about looking at the trend. You know, is this thing trending higher? Is it moving higher? Generally speaking, what are the pivots? And when I say pivots, I'm thinking, what are the levels that if this breaks, then the next target is high of day. So those are kind of the spots that I'm trying to get dialed in. I think that's that same one again. So right here, we've got this pop up, this pullback, sort of like a little pivot right there. This is a clean one, pop up, pullback, and then it goes. It's just usually formed by a little bit of a steeper initial drawdown, and then a rally back up, and then another pullback. So to be honest, in this current market, ABCD patterns are not my favorite because they are already indicating just a little too much weakness. And in this market, we really need some serious strength. So let's see. So let's look now for a second at micro pullbacks. So this is important. One of the reasons I wanted to share with you a little bit on the micro pullback is because in this market, stocks are moving. When they start to move, they move quick. Traders are not waiting. They just, boom, they're off to the races and they go. And we don't get a lot of ABCD patterns. We don't even get a lot of really clean first pullbacks like on a 5-minute chart. We get a micro pullback, a 1-minute pullback, and then that's it. So, and it goes and then it just comes back down. So if you're not jumping in quick on these micro pullbacks, you're missing the whole thing. So this micro pullback here, let's say this is a 1-minute chart. This was designed as a 1-minute chart. Having said that, you could have this same pattern occur on a 5-minute chart. On a 10-second, not really. It's too fast, but on a 1-minute, yes. So the way this is formed is a stock is squeezing up, and let's say it hits $3. That's $3 right there. So we know that could be considered a level of psychological resistance. It hits 3, and then it pulls back. You see the level 2. You see it dip back down here to like 292. And then it starts to come back up to 296, 297, 298. Boom, it pops through that level. Okay, so then we have another green candle. So what ended up happening, this actually looks kind of more like example 2, entry 2, where it's like it goes just a little lower and then it surges through. And that's a pretty classic micro pullback, and it's very common to occur around half and whole dollars. All right, those have that psychological resistance. So it comes up to 3, and then it moves higher. And in this case, we go up to, let's say, 350, and then it does it again. And so in this case, maybe it pulls back to 338. And maybe it even has a little red candle here. Now, this could be a 1-minute chart, or it could be a 10-second chart, could be a 5-minute chart, but then it rallies right back up and goes through 350 up to 375 and then up to next level 4, right? Those are the levels that would be trading around half dollars, whole dollars. And then that's all very common. That's the type of pattern that we see all the time. So when this is happening, if you're just sitting on the sidelines saying, well, I'm going to wait for a clean 5-minute bull flag, this stock could go up 40, 50% before that happens. And then you don't get it. You miss it completely, right? And that's a problem. And so the micro pullback is a pattern that, if you can visualize it, helps you get into a strong stock sooner. That's the idea. You've got a stock that's really strong. So what's the fastest way you can get in? Well, number one would be just to press the buy button. But if you just press the buy button in the middle of this candle squeezing up, like, right here, just randomly, you're just not managing your risk well, and you're just buying high a day. By getting in right here, I manage my risk off the low of that dip. It's a very micro dip, but I'm still managing my risk off that level, right? So the pullback helps establish low risk. In a way, it is a micro bull flag. And then the pullback here, it helps establish risk. So now the risk is right here. Now, you're not going to be able to take this with like 100,000 shares, because realistically, with such a micro pullback, it could flush back down. If you took huge size, there probably wouldn't be the liquidity to be able to sell on the bid if you had to. So this is more like, 10,000 shares, which honestly is fine, that you can do very well trading with 10,000 share blocks. If you want to trade with 500 or 1,000 shares, that's fine too. From $3 to $350 with 10,000 shares is $5,000. And then doing another micro pullback here, this could be a $10,000, $15,000 trade potentially. depending on how you size and scale into the move. So for me, it's usually starter here. Again, looking for green on the tape. So we've got the time and sales. We're looking for green orders to go through. Boom, jumping in right there. Maybe then adding to the position if it's going really strong, or if it does a micro pullback kind of right in here, add again at like 328, and then look for profit around 345, 350, expect the pullback here, and then hold a core position, add back to that position right here. Now looking for the move up to 375. If we get a micro pullback there, then add 380 for the move up to 4, and again, take profit as we approach 4. Wait for pullback around 4. If it starts to accelerate, and accelerating means that volume bars are increasing. So these are the volume bars on the bottom. If the volume is increasing, that's telling us that this is something that really has a lot of potential. And by this point, no doubt, it's already up 10%. The price of it is good. The relative volume's there. It hopefully has a news catalyst. And if the float is lower, we've already got everything needed for a quality setup of groups. So on that one, I'm going to naturally be a bit more aggressive. All right, so that's the micro pullback. And just to show you a couple examples of micro pullback right there, micro pullback at 449. Micro pullback, it pulls back just for a second and then goes up higher. And that's all you got. This thing went to $6. That's all you got. If you were looking for a pullback, you didn't get much. On this one, micro pullback right here at 316, then it goes up to 391. Pulls back here, that's a proper pullback, goes higher. Micro pullback right there. False breakout as it gets more extended. Same risk with the others. As regular first pullback is false breakout risk. First pullback right here, micro pullback at 350, goes up to 390, all the way up to 4, rejects off that level, comes back down. Highest volume ends up being on a red candle, reminding us that we want to get in early on these and not be chasing them too much. Nice micro pullback here, up to this high, dip, rips higher. These, they're a lot easier to sort of, articulate when it's happening in real time. These can just move so quickly. Even the screenshots are kind of a little tricky. That's a nice micro pullback right there on ACB. This one, GLSI, I mean, this thing went bananas. It did this nice micro pullback right there at 47.45, 47.50, then rips up to 50, 55, $60 a share. This thing went up to like $100 a share. It was crazy. Another one right here, pulls back, pops up, little pullback, and then it goes higher. So for all of these, I have, live trading examples and things like that. These are like all live trading examples of the whole half dollar, whole dollar break. We're not going to go into those right now. I want to just keep it kind of high level. Those that end up wanting to watch those, you're welcome to down the road. So now let's look at Parabolic. So let's see. I'm going to just hide my notes here on these. Parabolic, during parabolic price action. Yes. Let's see what section is this. We've got a lot of mentions of parabolic here. Yeah, some of these ones could be pretty crazy. These are the low volume ones, especially. I mean, this is parabolic, right? So this was, the stock went from $6 to $38. On this particular day trading, I think I went up like $175,000 on the day. I should remind you that my results are not typical. Trading is risky. GameStop, I was up $100 a share. I was in at $229. It's at $332. Only 250 shares. I'm up 25 grand on it. That's obviously parabolic. And so the thing with parabolic is that when something is going parabolic, you do not have a lot of time. You are not usually going to get proper 5-minute pullbacks. So when you're getting into parabolic stuff, you're really only getting micro pullbacks. And so let's think about why that's the case. That's the case because so many traders are jumping in to capture this move that it's not pulling back. It pops up, it pulls back for a second, and then more traders are right there ready to jump in. And then it goes the next leg up. And now You're having short covering. Short sellers are panic covering, and now it's just continuing higher. The reality is this is something that occurs in bear markets. You have short squeezes in bear markets. We had one just last week. So, I mean, it happens. You do have short squeezes in bear markets. In fact, some of the best short squeezes can be towards the end of the bear market as short sellers are getting really comfortable, really confident, just hitting things short. And then you get one that, does something like this that just accelerates like crazy. And you know what? Eventually, look, this thing came back down. It went all the way up to 36. It squeezed out all the shorts, totally liquidated them, and then it ends up coming back down to 12. So maybe they were right, long term. But can you afford to hold 10,000 shares going $300,000 against you? No. And even if you could, why would you? We've seen stocks that, GameStop went to 500. So you learn to manage risk. You learn to get the heck out when, there's something moving crazy. You don't want to get run over. It's not worth it. You never want to empower one trade to ruin your career, and blow you out of a trade, blow your account up. What was I at on this? $102,000 on this stock or on the day? I mean, this was wild. This thing goes from $350 to $13. So each one of these arrows are where I was trading it. Micro pullback, micro pullback, micro pullback, micro pullback, micro pullback, nice breakout, micro pullback, pops higher, micro pullback, nice break, micro pullback, nice break, reverses, back down, inverted head and shoulders, breaks through 9, micro pullback 950, parabolic up to 11, micro pullback up to 13. Boom. Now we're moving. This is what we're looking for. That was a nice one. That's when it starts to get really exciting. And these are fast moving trades. And this is where you have the benefit of trading. Those of you that are part of the community, you trade side by side with me. You can hear me articulating what I'm seeing. It doesn't mean I'm right on everything. I mean, I, of course, have my share of losers, but being able to have that kind of first base coach there to tell you what's going on, you don't have to do this all by yourself. So the biggest thing with Parabolic is this ties back to the micro pullback. It's jumping on those micro pullbacks as they're moving higher. So a stock like this one, we can go in full screen on this for a second. So on this one right here, really all you got. So first it starts to break out right here. It squeezes up to 8, does a micro pullback there, and then goes up to like 850 and 9. It dips, it breaks through 10, squeezes up to 12, it gets halted. It pops higher, it pulls back. This is a micro pullback right here. It goes up to 12, then up to 14. It halts. It opens. Now, it opens right here. It dips down. See the bottom of that candle wick? So it dipped down, and then it surges right back up to 20, pulls back, squeezes up to 21, 22, right into a halt. So that was another micro pullback there at 20. I mean, these are quick. So if you're not able to jump on fast, you're going to miss the entire move. Now, as part of this study group, I want to answer some questions that some of you guys have about trading in general, in trading during a bear market in general. So why don't we do some Q?
So when I taught this class live, I ended up going on for another hour and a half of Q&A. So in an effort to keep this episode relatively concise, I'm going to cut it here. And I want to remind you guys, if you want to do a 2-week trial over at Warrior Trading and get a sense of whether you like the way I trade in real time, there's a link right down below that you can check out. During the 2-week trial, you'll have access to the chat room, ultra low latency broadcasts, so you can listen and watch me while I'm streaming ad-free using the fastest streaming servers that we were able to develop. I have my own development team, and we built this out to achieve this goal of giving you real-time market commentary. You'll also have access to the same scanners that I use every single day. And so during your 2-week trial, you'll get a sense of whether you like the way I trade, whether you like the community, and whether you like the tools that we've built. And if you like it and you love it, then you'll stick with it. And we'd love to have you as a longtime member of the community. And if not, no harm, no foul. You gave it a try. You got a sense of what it's like, and it's no big deal. So I want to encourage you to take advantage of the 2-week trial right down below. And I want to thank you again, as always. If you have questions and comments, please leave them down below. We do respond to every comment posted on the video. And I hope you subscribe to the channel if you haven't already. All right, so keep learning, keep studying. The only way to get through this market is by being disciplined. So you can check out a couple more episodes from our channel right here and right here. All right. Thanks so much. See you guys soon.